Welcome back to Watching Business Incorporated here on Channels Television. And we start the second half of the program with what's going on in Kenya. We see that global ratings agency Moody's has cut Kenya's senior unsecured debt rating, as well as the long-term foreign currency and local currency issuer ratings to B3 from B2. The agency said the rating downgrade is driven by an increase in government liquidity risks. The agency also added that the Kenya's domestic funding conditions have deteriorated considerably over the past 2 months, with very low net domestic issuance contributing to financing shortfalls and delays in government spending. Well, let's find out what this means to Kenyans and to the country at large with Matt Kindiga, practice lead front of you, joining us now. Hi, Matt. Good afternoon.
Hi, good afternoon. Thanks for having me on the show today.
Good to have you. So what does this downgrade in rating, what exactly does it mean for Kenyans?
Yeah, so not great, especially for government finances. As you mentioned, the government has really struggled to raise funding domestically. This is quite a bad sign that it's really struggling to meet its revenue goals. What it does also likely mean is that the government will face rising debt servicing costs in the country. And this is because debt will be less desirable, or Kenyan debt will be less desirable to hold. We expect interest rates to also rise on Kenyan debt. What this tells us is that the investors are not convinced that the Kenyan government has full control over the outlook for its government finances. It doesn't necessarily have a credible plan to stabilize its public finances. We think there is some risk of Kenya facing debt distress by the end of this year, or more likely in 2024. And this is because there is a 10-year, $2 billion Eurobond that is likely to mature, or expected to mature in July next year. So this is when we're likely to see the most pressure facing government finances in Kenya.
So we see a lot of African countries, sub-Saharan Africa especially, getting back to IMF, getting loans. We've seen Ghana, they got their $3 billion. What is it that can change the trajectory of Kenya at this time? You know, do they have to go to same route, or are there other things that can actually change their story?
Yes, so Ghana is a bit of a cautionary tale for countries like Kenya, which is arguably, going down a very similar path that Ghana went down before it defaulted. Ghana's default will likely focus minds amongst investors, but also amongst the Kenyan government's approach to debt restructuring. So we would expect the Kenyan government to try to preempt a fiscal crisis by very, very actively and assertively trying to renegotiate its debt, restructure its debt with its creditors. So certainly we do expect a very strong push from the Kenyan government side. Although we are also expecting to see the Kenyan government implement quite severe austerity as another alternative, because it simply doesn't have the cash to continue to spend and to invest. So we are expecting to see delays to infrastructure projects, for example. Procurement of goods and services by government departments and state-owned enterprises will fall, for sure. And we are also likely to see a decline in civil service wages, or at the very least, arrears build up for civil service wages. And this is because the government will prioritize debt servicing. It will want to avoid a default at all costs. And another thing that the government will be doing is raising taxes raising tax revenue by increasing taxes, and also tightening down on, or clamping down on, tax evasion and tax avoidance. So a range of measures that we expect the government to do in order to try to avoid some sort of debt crisis emerging.
Yeah, and I'm sure those moves will also have its own costs to the economy. So when we balance it out, how do we see projecting economic growth for 2023, the value of the Kenyan shilling and all of that? How does this fit into that?
Yeah, so the summary really is that it will negatively affect growth quite clearly. We have already downgraded our growth forecast for Kenya for this year and next year. For this year, we were previously forecasting 5.5%. We're now forecasting 3.7% and a similar figure for next year. Bear in mind, this will be the worst performance for the Kenyan economy if you exclude the effects of the COVID pandemic in 2020 since at least 2009. So really not great for growth. And we are likely to further downgrade Kenya's growth forecast for this year because of the deteriorating public finances. We are also expecting to see this aggravate the depreciation of the shilling. Our current view is that the shilling will probably end the year at close to about 150, maybe 160 per dollar, although it could go even further than that, depending on how bad the government's public finance state becomes. In terms of why this will affect the growth outlook, mainly because public finances, public spending, investment is a very large source of aggregate demand in the country, and we will see this being removed from economic growth. However, it is worth remembering that we are still expecting the economy to grow. There are industries that are still doing quite well in Kenya, especially in the private sector, specifically in services industries. This is a trend we are seeing across sub-Saharan Africa. Services industries are very resilient, although growth is slowing. In those industries, they still offer a source of demand and will be keeping the economy afloat for our foreseeable future. So certainly a much more negative outlook for Kenya's growth in 2023, 2024, but not necessarily a recession on the way.
All right, so resilient Africans with resilient economies. Thank you so much, Matt, for giving us that details.
Thanks for having me on the show today.